Another company that has posted earnings is L&T Tech, and Jasmeet joining in to take that conversation forward.
Well, right, yes, thank you for that. If you look at the overall results for LTT, yes, we have seen that the company has had a mixed set of numbers, though the deal wins have come really good in this particular quarter. The profit sees an impact of 8% coming on the back of that one-time employee cost. Apart from that, the overall sustainability segment has led the growth for the company. In terms of geographical split, we see that the overall Europe geography is something to watch out for going forward, and Indian geography is a slight downtick in this particular quarter. While we have also joined by Mr. Chadda today, I would like to start off by welcoming you on the show and would like to ask you, how do you see the recent deal wins ramping up and how do you see them materialize going forward?
Look, we're fairly pleased with what we've been able to do. We've been able to grow 10.2% year on year, as well as profits are slightly up. And fifth consecutive quarter when we've been able to close these deals of 200 million TCV. In the last few quarters, the deals that we have closed have been in the sustainability sector, and therefore you see that the sustainability sector has grown 11% plus year on year. Margins have improved. Mobility has actually turned around slightly, so there's a very slow growth, small growth in mobility as well. Margins have improved. And tech, we've been selective in the kind of business that we pick up and we execute because we are looking at our portfolio for the next 5 years, and therefore you see that it's grown year on year, and in fact, the margins have improved. So this quarter has been a quarter of pivoting on profitable growth rather than growth alone.
Well, got that view. I would like to also understand, has the selective project approach, which has led to the slower overall top-line growth, but the margin expansion for the company?
Yes, sir. And the margin expansion, if you look at it, the gross margins are up 200 bips. The EBIT margin is up 120 bips. This has come ahead and ahead above what people were expecting. And as you look forward, you will see the margin trajectory continuing to accelerate and growth coming. And there are businesses that we are deprioritizing as we move forward. And that's what you will see. In fact, if I can take a minute and talk about it, look, LTTS is a technology company. We see the next 5 years and we see a huge potential for us in terms of upside in AI. In fact, we are now rebranding and saying that we are not focusing on AI alone. We are focusing on EI, which is engineering intelligence. Engineering intelligence stands for physical, industrial, and digital AI, all that together, and frugal AI with that. So as I look at the company and I look at the future, and we are redoing our stack in the EI stack, I do see some of the business that could potentially get commoditized. We are dropping that business, and therefore you're seeing the improvement in margins, but you're seeing a slower growth in the tech area. And that's because we're being selective in the kind of work that we're picking up.
Well, engineering intelligence, that sounds interesting. I would like to understand which areas do you see the overall deal ramping up when it comes to the engineering intelligence as a whole?
So if you look at the deals going ahead, I do see in Q4, we've got a very strong pipeline. In fact, pipeline is up for us 20% year on year, and we are expecting that we will be able to grow further in the sustainability sector. We will grow further in the mobility sector. If I look at tech, we will grow in tech, but we will drop some more business potentially. So you will potentially see LTTS come out of the year growing definitely ahead of peers. And as we look at next year, think about us as an EI first company and India's first EI company as we move forward.
Okay, got that. Now moving on to the overall OEM space. So we have seen a lot of macro uncertainties coming in the OEM space over the last few quarters. I would like to understand, how is it impacting the overall business?
I do see the OEMs ramping up. In fact, you know what's happening is that we are gaining market share. We are able to win ahead of competition because of we've got more than 200 patents, right? We've got a number of widgets that we have got in-house. We've got enormous amount of software expertise that we are building over the last 6-9 months that we have built. We believe all this is helping us in gaining market share, improving foothold, etc. And the OEM spend is changing, and we believe that we are in the right place at this stage to take advantage of that, provide value to our customers, and grow further.
OEM space is changing. Got that views. Well, I would like to understand the margin sees a very healthy uptick in this particular quarter. I would like to understand what sustainable margin range you expect in the near term going forward.
Look, we would like to operate in the 16.5% plus EBIT range. And by the time we get to Q4 FY27, we will definitely and surely be in that 16.5% EBIT range. That's our aspiration. We do expect growth in top line in FY27, and the year has to play out, but we are fairly comfortable at this stage to be cautiously optimistic about FY27.
Well, 2 out of 3 segments have gained in this quarter, but the tech segment being the major one, we see the downtake. It's down about 10% in this particular quarter. So I would like to understand what are the reasons behind the overall tech downtake in the Q3 of the company.
Sure. So see, mobility has turned around. You can see a slight amount of growth there, improvement of margins slightly. If you look at sustainability, you sure-footed growth and improvement in margins. When it comes to tech, it's because, I mean, if I take out the part that we were, that we have stopped doing, we've actually grown much higher in tech. See, given where we are in the market and where our client confidence, as well as the fact that we are right there about 9 months, 10 months ahead of competition and peer group on technology, we can make that choice. We can afford to make that choice to be a little selective. And that's what you see in the results. And that is because, and that's how you can see the margins improve.
Okay, got that. We have seen for other tech players, the Indian market actually seeing an uptick. But for something like an LTTS, we see weakness in this particular market. So how do you see the overall Indian geography turning up for the company going forward?
So there are certain parts of our India business, along with certain parts of business that we've had in the Middle East and Europe, that we have discontinued because those businesses do not fit with our overall strategy. And that's how we've been able to improve our margins as well. And as I look forward, we will see, we'll be selective in the Indian geo and in line with our strategy. Look, our strategy is to be an EI first company. When you look at an EI first company, you're looking at physical, digital, as well as industrial AI coming all together. If I look at what we have done in the past, we had tied up with NVIDIA on the Omniverse platform. We have done further work in that area. We've been able to develop solutions that we've already deployed in the field in physical AI. We're working on frugal AI with some of our clients in automotive, in industrial, in rail, in medical. I believe all this will bode well for us, and AI ramp up is a once in a lifetime opportunity that we believe will give a tailwind to the LTTS EI strategy.
Okay, understood that view. But we see that profits are down about 8% on the back of the new labor code. I'm hoping that's a one-time charge. I would also like to understand how do you see the overall impact on the profit going forward because of the new labor codes?
Look, there was a one-time impact that we have taken. We've already filed that with the exchanges. There was a very small amount that we had. Look, we sort of kind of had thought about this as something that was coming, and we've been moving in that direction deliberately in the last 5 years, and therefore the impact that we've had is fairly minimal. We have taken that into account, and we have provisioned for it. And as you move forward, you can continue to expect the margins to expand. And whatever we had to take as an impact, we have taken it already.
Well, got that view. Thank you so much, Mr. Chadha, for joining us today.